Do you often find yourself following signals from indicators, where all of your indicators are giving you a green light and yet the price just reverses instantly? If this happens, I've got a solution for you. Hey everyone, welcome back to The Trading Journey, a channel where we improve together at trading. So as I started trading, I was not sure how to predict the movements of the market. So I was following indicators, it was just easier that way. And I was convinced that if the MACD was showing some bullish pressure, then it meant that the market would go up. But then I realized it's actually much more complicated than that. And the key concept that I learned to solve this issue is actually pretty simple, but it's very powerful. Let's jump into the charts and I'll show you what I mean.
So price movements are not completely random, they actually tend to follow some rules and respect levels. And depending on the situations, these levels can be called support or resistances. So for example, here on Bitcoin, we have an area where the price dropped at one first time here, then it retested here, and it touches again here, and then again, as well as here. So this could be either a line, or we can just draw a box, more large area like this. It's up to you. I prefer lines, but sometimes I also use the boxes. What this means is that the price dropped and then there was support found in this area. But on the other hand, once this support is broken, it can become a resistance. So we see here that the price went through and it became a resistance. It tried to go, but then it dropped again. Because keep in mind that this is the whole resistance zone. And once it was broken down, it acts as a resistance and the price rejects off of it. And you see here, when it's crossed again, then it becomes a support here again. But you might be wondering, why does price actually respect support or resistances? Well, in the market, there are two types of actors, the buyers and the sellers. And if everyone wants to buy at the same place, like here, for example, the price will go up. So this is also support. The price will shoot up. But if everyone wants to sell at the same place, for instance, in this zone, which is a big resistance, everyone wants to sell there, so the price will sell. That's as simple as that. However, if there's not enough people who want to buy a support or to sell at a resistance area, it will eventually break. And that's exactly what happened here. This support had been pretty consistent for the past months, and then at some point there was just not enough people to buy back, so then the price just dropped. It's the same for resistance. When at some point this level here on Bitcoin, that's like the all-time high. When there's not enough people who are scared and sell when this level happens, when we reach this, at some point it will be more people buying, so the price will go up like this. And the reason why a support that's broken gets rejected and becomes a resistance is because, let's say there was people who bought here, they were really happy because we just broke that resistance. We're at the all-time high, life is good. But then all of a sudden, it starts to be bad here. It starts to go down and they're getting scared. So as soon as the price goes back here, then they will just sell to go to break even and not lose money, because here they spend like a week or two with losing money. So that's psychologically very hard. And that's the reason why when there's a level that's broken, usually it's retested and then it keeps rejecting until there's eventually enough people to break that level for good. And it's exactly the same thing happening with resistances. If everyone is shorting and believing that it's going to go down, then eventually at the time that it breaks, there's just too many people who shorted. And when then the price comes and retest, they will close their short, which is in other terms a buy to the market, and these kind of things happen. And at the same time, there's also the people who are the buyers, and they see that we've changed trend and now this has become a support area, so they also buy. And that's why you get these big moves up after we break some significant levels, because this level, as you can see, was very significant. Now, if you're learning something new from this video, take the time to put a little thumb up, that helps a ton the channel. If you're not sure how to use these support and resistances, how to draw them properly, you have to look for areas where the market has reversed a lot. For instance, here there was a big reversal, so you could also put this support here at first. And when you see that it reverses here and here again, you can see, okay, maybe this is more of the significant level now. You do the same here. You see as many times as possible that it's been touched and retested. And you see here there's a wick, but you just count the close of candles because this is just a liquidity grab. I'll make a video about this concept as well anyways. And you can see the more touches, the better, the more significant the level will be. And try also to avoid putting too many levels that are kind of in rangy markets like this. For instance, here in the middle, that's like called a mid zone. It's not really as strong of a support as the ones that are at the edges of the market where there's really like the big reversals happening. Here there's like some tests, some retests, but it's not as significant. So usually I would either write these in a different color or not mention them so much, unless they're relevant in the future. For instance, here maybe this would be relevant area because there's clearly a little range here. Also, another thing you need to keep in mind is not to draw too many lines, because you can always just add one here, and eventually you end up having so many levels that you don't really know what's relevant and what is not relevant. But once you have some levels, it will start to make much more sense and you will not feel like the market is moving completely randomly. Actually, what it's doing is simply moving from a zone to another zone, and it's respecting these areas more or less. But with these, you can start to understand that it's just bouncing back between zones and trying to catch them. With this, you can improve your trading greatly and stop getting caught with market reversals that you don't understand. And this will also avoid that you just buy when there's a resistance, or that you sell when it's actually a support and the market is gonna reverse. That's it for today's video. Don't forget to leave a like if you enjoyed and if you learned something new. Feel free to subscribe to the channel, that would really help a ton. And I'll see you in the next one.